Hello guys, good morning. In this video we're gonna discuss low time frame plans for Bitcoin going into CPI today. Alright, so not really expecting anything from CPI. The only thing I'm expecting is volatility. Okay, so expect moves, expect traps, expect sweeps. So we're gonna discuss how we can potentially benefit from those moves. We'll take a look at liquidation levels as well. Identify where there's potential liquidity resting above some highs or below some lows, and try to use those areas to potentially base our plans off of and potentially look for a trade then later today. Okay, so we'll start off with marking out just simply some key levels for Bitcoin. Okay, so started off on a clean chart. As I said, not gonna go into the higher time frames. Just want to give you my thought process on how I try to trade the low time frames. Okay, especially when you're expecting moves that occur after bigger news, after CPI, for example. So Monday high and Monday low are straight away very key levels that you can use as a draw on liquidity, right? So whenever Monday low is swept, the next potential target could be Monday high if it's unswept, and the other way around. Obviously, you've got to use more than just the two levels, combine those with supply and demand and stuff like that. But marking them out on the daily and then zooming in is never a bad idea. So Monday high, Monday low. Then zoom out. Okay, so we can immediately see where's going to be liquidity resting to the downside. That's especially going to be below this low, right? In my opinion, lots of stops are going to be resting there, below here, and then it's below these. Okay, our key range low. Now, where's liquidity gonna be resting to the upside? Well, in my opinion, above here and above Monday high. Okay, so key highs, key lows, isolated highs and isolated lows are the highs and lows with the most liquidity above or below them. Why? If the high is isolated, it means that more people are gonna have placed their stop above them, right? So that's how I see things, at least. So how can we use those areas of liquidity now to sort of plan us ahead of a volatile move or a potential sweep of either side before moving into the other direction, right? So we're gonna go over the different scenarios. What if Bitcoin dumps from here, right, and takes out Monday low first? If it dumps from here, right, and dumps below these lows, I think that there's gonna be a big liquidity cluster resting around here that can potentially immediately cause a bounce for Bitcoin, right? Send us back above Monday low and send us straight towards the opposite side of the liquidity area, which would be above here. Okay, so that's immediately the first plan for Bitcoin. If we sweep Monday low into these lows and ideally take those out as well, right? And we see price stalling and we start seeing some buys come in and some strength, right? Take a long, put your stop pretty wide in case we go for another sweep, right? Target up here and Monday high after. Okay, Monday high into the area of supply from all the way back here. So that was the area that got rejected like four or five times. Okay, the area where we started dumping from initially after breaking to new high after new high after new high, and then this was the area we dumped from to new local lows. Okay, so key area, right, we got rejected from, gonna be a key resistance on the way up as well. Okay, can narrow it down, you know. If you say this was the initial supply, right? What was the second supply we started dumping from? Around here. Okay, so it's just gonna be general above Monday high is gonna be key resistance, right? And you just, the easiest invalidation there for shorts would just be above here, I'd say. Okay, so somewhere above there. So that's immediately gonna be the target if we sweep the low first. And it's important that we have to that we sweep the low first, because then we're straight onto the next plan. What if we go for the highs first? What would that mean? If we start pumping from here and we take the high first, what would that mean? Clean lows to the downside, clean lows to the downside, clean lows to the downside, Monday low unswept. If we go for the highs first, I'll more than likely take a short here, keep my invalidation there, above there, okay, just in case we go for the sweep of Monday high, right, into this consolidation that led to the down move. So then short here, invalidation up there, and target these lows. And at that point, I would say the chances of us not sweeping this liquidity and reversing, but instead going for all of the liquidity at once and dump straight to 26.4 increase a lot, okay? And why is that? Well, because as I've just explained, if we take the lows first, right? If we take them first, you still have that draw on liquidity towards the upside because this liquidity cluster hasn't been taken. But if you take the highs first and then go for the lows, longing here has a lower probability because liquidity to the upside has already been taken. All right. So that's just some low time frame, liquidity plans, right? So if we go for the lows first, where's the draw? If we go for the highs first, where's the draw? And combining that with some key areas, you know. So let's take a look now at Hyblock. All right. And what you can see here is the liquidation levels, right? And how I generally use it is I use those in clusters. So you just take a look at where the major liquidation levels are going to be resting, and you can immediately see that that's going to be here below these lows, and guess what? Here above those highs. Here, and then after it's all the way up to here and here. But just in general, right, if we go for the lows first, right, as I said, it lines up perfectly with how we analyze the chart. If we go for these lows first, right, where's going to be the next draw? Well, towards all of these. If we go for the highs first, right, where's the draw going to be? Well, towards these lows. In general, I currently like the long side more because I think lots of people are trying to short into these lows, expecting CPI to be bearish and to send prices lower down. But I think they're not counting for a move up or a sweep of the lows and a straight squeeze back to new highs. So I'm personally favoring longs going into CPI. But longing here is pretty risky. I want to see a sweep of the lows, and then I might look for a scalp long, keep my stop, probably below 27.5, around there. Let's take a look. I would keep my stop. Probably if we go for the lows first, it would probably look something like along these lines, okay? But as you can see, using these in Confluence, as you can also see, big red delta on Bitcoin, meaning that there's much more short liquidations than long liquidations, okay, which could also be in favor for for the long side. All right, so those are the plans. I hope you enjoyed. I hope that's clear. Leave a like on the video, subscribe to my YouTube channel if you enjoyed, helps me a lot. Thanks to Bybit for sponsoring. If you want to join my Discord, simply use the link in the description. Sign up to Bybit, deposit some money, send me a DM and I'll get you added. You'll also get free access to Coin Market Manager and up to $30,000 in bonuses. Leave a like, subscribe, and I'll see you in the next one. Bye.